Hi, Mike here. I want to talk about my investments with you today and then talk about yours with you. And I'm not just talking about individual stocks and what the market's going to do. Let's talk about your overall portfolio of everything you own. So I'm standing on 100 acres of land that I bought. I took out a low interest loan on it, practically nothing, and I got a bargain on this, or I believe I got a bargain. And one of the reasons why I did this is to have something in my overall mix of assets that's completely stable in value. If the stock market were to fall into a vicious bear market and crash like it did in 2008, this won't get hurt at all. In fact, if there's the type of financial turmoil that I think can actually hit in the next couple of years and bring inflation, this will be an asset that will be very easy to pay off, will go up in value, and so forth. So I'm sure that you own some real estate too, and you may want to buy more real estate. In fact, on this land, I'm doing things to make it increase in value by planting trees on it. In fact, I've got some of the property marked out for doing that right now. And what's kind of interesting is behind me is a tree on this property. I'm in the woods, as you can tell, that's probably 150 years old or even older. It's a gigantic tree. And this tree has withstood numerous storms, who knows, an earthquake, wind, and nothing has knocked it down. And I think what you need to do is think about your financial life as something that can be built up, as stable as this tree, that nothing can ever tear down. And that's why I bought this real estate. That's why I'm investing in gold in the precious metals market also. But let's talk about your investments, because most people, when they think of investing, they only think of two things. They think of the United States stock market, a mutual fund, an ETF, the NASDAQ, the Dow, the S&P 500, and they think of CDs and bonds, interest-bearing instruments. And for example, I'm going to show you this magazine right here. This is the AARP. This is the current issue of it, and it's got an article that says, financially speaking, don't be too cautious. And this is geared towards people retirement age, of course. And what it says is you need to have what they call a 3-bucket strategy that can generate income for life. And what they advocate is putting 30% of your investments in stocks and 70% split in cash and bonds. And they tell the people reading this that don't be so cautious that you don't have anything in the stocks. Put 30% in stocks and the rest in this safety, which I think is perceived safety. It is actually the most dangerous thing that you can put your money in right now, in my view, is the 70% of CDs and bonds. And unfortunately, that's what most Americans did after 2008. Many people got out of the stock market because of the volatility, because of the horrible crash and risk that was revealed by that crash, and put their money into CDs and bonds, which was a smart thing to do in a certain sense, because the bond market since 2008 has been in a big bull market. However, at this time, new money should not be put to use in that market, because it has become the greatest bubble possibly in American history. The evidence of that is that if you put your money now into a CD or into a treasury bond, you get no return. When bonds go up, rates go down. So what in effect is happening is, when you invest in a treasury bond, you're taking risk for no return. It is essentially the worst possible investment that you can make. And the CD market is really no different. And one day, interest rates will go up. I think dramatically higher from where they are now. And that means if you go out and you put money into a CD, you may be trapped in something for 5 years, and before those 5 years come to an end, inflation may hit, or interest rates may go up, and you could be getting practically nothing on your money when inflation rates could be 4 or 5% or something. In other words, it's an investment. If you make now, you could stand to lose a lot. So most people, when they think of investing, it's that, or the stock market. They're scared of the stock market, and frankly, I'm nervous about the stock market too at this point, because we've been going up for 5 years. The stock market is overvalued, and history proves that bear markets come. And since 1999, we've had 2 vicious bear markets, and I do fully expect another one will come one day. So the average person then is feeling lost with nothing really to do. Well, I want to tell you today that there is an alternative, and I want you to start to think outside the box. The alternative is commodities, physical things. Real estate's physical, lumber's physical, right? Trees, it's a physical thing that is not going to disappear. This tree is not going to disappear, and gold is not going to disappear. Right now, it costs a gold company an average of $1,200 to produce an ounce of gold. So if gold were to drop in value, it can only fall so much because it costs about $1,200 an ounce. To me, that statistic shows that it's safe to own gold, and I think gold is starting a new bull market and is going to go up and provide massive returns for those of us investing in it. In fact, I've got gold right here in my pocket. That is an ounce of gold. And I have physical gold. I don't normally carry it around, and I certainly don't have it in my house either. You can find gold dealers that will store gold for you and insure it and keep track of it, so you don't have to keep up with it yourself where it is or worry about someone taking it. But you can do that if you want. I prefer to have others watching it for me, and I don't want to lose it. But anyway, you can look at gold and you can buy it, and this is not something that's going to go away, right? And I think that if the bond market falls because of the size of the United States debt, and one day it's going to go into a bear market, gold will go up in value. Inflation will hit. It'll be easier to pay off your real estate. Interest rates will go up. And the stock market could fall too because of the turmoil. And if that happens, we'll hit a financial market situation where stocks are declining, bonds are declining, inflation is hitting, and in that scenario, this advice in this magazine, which is pretty typical advice given to people, to divide up your money into cash, bonds, and stocks, will be a disastrous thing to do, because all those things will lose real value in comparison to real money or real assets. Inflation. So this is a big mistake. And you've got to think in the big picture and tell yourself to invest in a mix of things. I'm not saying get out of all your stocks or flee your bank account. I'm just suggesting to you to seriously start to put physical assets as a part of the mix of assets that you own. Now, I go a step farther than that because I'm so bullish, in fact, on gold. I just don't see it as something to hold for safety, but something that's going to go up tremendously in value because of the way the commodity markets are situated now. We had a big bear market drop in 2012 and 2 dumps in 2013, and I believe we're now making the transition into a new bull market that will last for several years and see the price of gold and other commodities go up tremendously. In fact, it's already starting to happen. Gold just a few weeks ago went through its 150 and 200-day moving averages. The price of several commodities also exploded in value. The price of coffee has jumped up 70% in the past 6 weeks. One day 3 weeks ago was up 12.5%. What I'm telling you is that commodities are starting to come alive and signal that inflation is coming down the road. Well, inside the stock market, there are companies that mine for gold, mine for silver, mine for palladium and copper. You've got agriculture companies, you've got oil companies, you've got natural gas companies. Some of these companies, in fact, pay nice, beefy dividends that are fun to collect every single month. But many of them are trading, their stocks are trading at very cheap valuations. They're in a position for explosive earnings growth because of future production and projects that are going to be coming online in the next year or two. So you're getting the magic combination when it comes to investing of a new bull market, stocks priced cheap with high earnings growth expectations. And it's a very select sector of the entire stock market where this is lining up. And I think no matter what happens with the Dow or the Nasdaq, the S&P 500, this is going to go higher because they're in that magic position. In fact, in every market, even the most bearish of markets, there are select sectors and trends that make people money, and this is it. So I just wanted to, expand your mind a little bit, get you to think beyond having a simple account that's invested in stocks, meaning the U.S. stock, the Dow and S&P 500, and bonds, as if those are the only two choices that you have, and start to work around that and think around that, because in the end, that's what big money does. I tell you, there's a great book that was put out a couple years ago by an author named Mebane Faber, who studied what the largest endowments of colleges, such as Harvard and Yale and Stanford, do with their investments. These colleges have hundreds of millions of dollars, some of them $1 billion, of investments that they've gotten because people have donated so much money to them over the decades, and they've used that money to invest wisely and build wealth year after year after year, and they use that the interest to fund their operations. Well, the thing is, they do not invest by putting 30% in the U.S. stock market and the rest only in cash and bonds. What they do is they invest in a whole mix of assets. And by doing so, when the market turmoil has come in the past, they've actually barely lost anything, and some of them even made a little bit of a positive return in 2008. So they're not sitting there, dependent on the whim of the market, of the stock market. What do they invest in, you may be asking? Yeah. Well, they do invest in the U.S. stock market. They also invest in foreign stocks. They invest in real estate, REITs that give them rental income. They also invest in commodities, funds that invest in commodities. They also invest in land that grows timber for them. Now, look, I tell you, I'm doing a little bit of that, as you know. I mean, here's land I'm sitting on, right, that I'm going to plant trees on. That's potential timber I could cut down one day. I got gold, I got commodities, but look, I'm not doing everything these people are doing. I don't own rental income. You don't have to do, you don't need to make things complicated at all. And, these guys got billions of dollars. I ain't got billions of dollars. I'm sure you don't either. That's kind of a crazy amount of money. But you just do simple stuff. And, the simplest thing you can do to weather anything and turn your account into a tree that can't be knocked down is to get involved in the gold market, to buy some physical metal, and in your account You can also buy the GLD ETF, the SLV ETF, in individual stocks. And in the end, I do believe that the right individual stocks will go up even more than the price of gold and silver because of the exponential multiplier inherent when a company stock is at a low valuation and they got great earnings growth coming down the line. So this is what I wanted to talk to you about today. And if you want to do more and really be a part of some of the things I'm doing, I suggest that you join the Wall Street Window Power Investor Service. This is an inner circle mastermind group that I have. We have live webinars. I send out a research report to all the members of the group almost every single week, going over the individual stocks that I think have the most potential. I even tell the people in the group all the stocks I own, the number of shares I own, exactly when I buy or sell anything, all my trades. It's an open portfolio, so you can know everything I'm doing, full disclosure, look behind my shoulder, learn from my investing. In fact, I even got a complete stock market course in there. Most people charge $1,500 to $2,000 for courses such as the one that I give you for free if you sign up today. And inside the course, I even have things about the various technical indicators that I use to understand what's going on in a market, including a big thing about the 200-day Bollinger Bands. I really believe that if you sign up today and take advantage of this and get in, that it can make all the difference in your financial future and really help you become a part of these markets by participating not in buying the S&P 500 or some fund and praying it's going to go the right way and being scared about what the market might be doing, but getting into the correct sectors and keeping your mind on the big picture, because it's the big picture and aligning yourself with that is how you truly make money in the long run, and also proper risk control and diversification. And when you do these things, you actually make it so it almost seems easy to make money, and you sleep well at night, and you essentially don't have anything to worry about, So that's my video for you today, and I'll be talking to you later.